Good morning, everyone. Hope everyone is keeping well on this fine Thursday morning. Thank you for joining our weekly webinar. Again, we'll give a few minutes for people to join in. So you've been a busy guy this week, John. I've noticed you a lot on social media, particularly on the progressive community. You've been quite active, answering a lot of questions about what's happening in the world of property investment and people looking for your input.
Well, two things that are interesting. So Facebook is softly, it seems, rolling out new functionality, and Rob Moore is someone they had agreed to work with somehow. I don't know what the backstory is there, but it started late last year, early this year. I heard about it through Barry Duddy, and you can be a supporter of Rob Moore, which is the person or the page, and that is a fee-based membership community. So Progressive rolled out the same functionality, Facebook functionality with a fee, and they rolled it out to their community, and they're basically saying that we're running certain courses or certain video content behind the paywall, this Facebook paywall. And one of the ones they just ran was a JV and financing challenge. It was a 7-day challenge. Kevin McDonald, is that how you say his name?
Yeah, an Irish guy, so I would know that name well.
Yeah, I mean, I want to say McDonald versus McDonald. It's McDonald. So he ran a 7-day program, and it was quite well run. There was a lot of useful information. It's particularly salient and relevant to the LEOcrowdfunding community when it comes to how to build your audience to attract investors, how to actually pitch or share. And my contribution was to help point out where the boundaries are for the FCA and how to keep it legal or reduce the probability that you'll slide over the line.
Yeah, I think one thing that stuck out to me, and I obviously tuned into a number of the broadcasts, and as you said, it was very well run, very informative. I think what struck me, probably shouldn't have been surprised, but what struck me was just how a number of people there are obviously new into property and have absolutely no idea of the whole compliance factor or the whole compliance arena regarding raising funds. So that I found quite startling in some respects. And it just shows there's a lot of education still required in the market. And people maybe think that property investment in times past was something that just did on the side and go out and talk to a bunch of friends to raise money, but all of a sudden they're now having to understand that it's there's regulation involved here, there's compliance involved here, and you better be aware of it and at least up to date with it,
Yeah, I mean, to make it clear, so I was a participant, I wasn't in any official role, but as someone that understands the FCA regulations and having produced an infographic, Kevin wanted to cover PS 13.3, so I shared with the community the infographic, and Kevin kindly made reference to both, actually myself and David, that we are much more up to speed on the regulations than he is. So just listen to the recording that John made, and you can reach out to David, that sort of thing.
Yeah. Okay, let's get on with today's webinar. So again, welcome everyone who has joined us once again, and looking forward to going through some relevant information today and bringing everyone up to date. So what I'll also do now at this stage is just shout out to next week's webinar, so that if anyone does happen to drop off just before the end, then they get the information at the front end and at the back end. So next week, I'm really delighted that we're going to be joined by the guys from Curation Tech 99, Hitesh and Ryan. I know they're known to you, John, as well. I know you've done some work with them. Two really good guys. Yes. And I think what I plan to do, John, is use their upcoming project really as a case study, and sort of deep dive into their journey purchasing the land, how they went about deciding what to put on it, and they've definitely got some interesting angles on how they've approached this in terms of the spec. So I think it'll be a very interesting webinar just to sort of pick through their brains on this.
Yeah, I mean, it'll be great because especially Hitesh is a civil engineer, very much into the detail. He's managed some large projects, so you get this sense of ask him a question, he'll know the answer. And Rain has much more of a UK-based residential multi-generational family development background. So there's some significant experience between the two of them.
Mm-hmm. Okay, so first point today then, property market update. And for those of you that are involved in following Premiership football, there used to be a segment on Match of the Day called Too Good, Too Bad. That's probably not in your normal watching on a Saturday night, John, I'm guessing. I'm sure you prefer the American plagiarized version of the real game of football. That's a whole other discussion. But Too Good, Too Bad.
I don't know much about either of these things, but even the fact I don't even know the show exists. So.
Oh, you don't know what you're missing. The beautiful game, the beautiful.
I'm sure
game.
You're going to tell us right about now.
Yeah. Well, too good, too bad is just to pick sort of two good things that happened in some of the matches and then two bad things. So we probably should do that with our property market update. Too good, too bad. So the ones I've chosen this week, and again, things are moving quite dramatically. The two good ones that I picked, first of all, I'll just name them all first, and then we'll deep dive into whatever ones you think are most relevant. So the two good sales, completed sales in June 20, were actually higher than June 19, which is very, very interesting.
So now, 2020 June is up compared to 2019.
Yeah. So as in, the recent June is more than it was last year. Now, probably that's a follow on from sort of a pipeline been pushed because of COVID, and it's all come through in June. But still an interesting positive figure. The other one was 85% of construction sites in England are open currently. So again, that's very, very positive news in terms of sort of building, getting back to normality and construction happening and progress being made. The two bad are probably a lot of speculation. There might be a sort of a mass eviction taking place once the eviction ban is lifted, where perhaps tenants haven't been paying their rent and the landlords are just waiting to get them kicked out. So there's a little bit of discussion around that and how that might impact things. And then, just the overall uncertainty of the economy, fears of recession, and that's going to continue to impact. So that's my too good, too bad. I'll let you make any comments on that or deep dive into the ones you want.
I don't have a lot to say in any of those. I think we are definitely in times when the data is changing rapidly. I wouldn't overly be pessimistic or optimistic. It's going to be turbulent. A lot of times we're comparing a different period to now, so therefore it's the contrast that sounds overly negative, overly positive, because the context has shifted so much. So your job as a property investor, anybody listening, is to be nimble, to figure out how the market's impacting you. Don't worry about the market. You don't buy the market. You buy a house at a time, or maybe a small portfolio. So do your deals, be smart. Cash is good. So, focus on the cash flow. Landlords, I don't think, are in a rush to evict tenants if those tenants pay. So, the tenants can self-correct, just pay the bill. So.
Yeah. And I think the thing I look for most isn't so much the actual minute detail, but it's just almost like the bird's eye view. So if I don't know what the figures were in the middle of lockdown, it's probably very, very few sites were open. But if you're up to 85% of sites open, well, that's the trajectory of that is obviously positive. You can argue about the overall impact on the market, but it's certainly better to have 85% of sites open than not, which I think is the key takeaway of that there is a degree of normality returning, and that people are back out there getting on with business and building houses.
Cool.
Yeah. Okay. Anything you've picked up on in recent weeks, or even on that progressive course last week, or challenge, I think is a better word for it. Sort of opportunities arising. Anything?
The challenge is the challenge, as in the 7-day challenge that Professor ran for JV funding.
Yeah.
I mean, I really thought Kevin did a great job. You've cost you £3.50 or whatever the number was for pay for months access to the supporter group, extra benefits there, and you got this challenge. And one of the things that Kevin focused on was you have to get out there and build your network. You have to basically get out there and start talking to people, and it's easy to do that online compared to physically driving around all the time.
Mhm.
And I love the point that he was making about, like, don't immediately start pitching. This is, you're ramming something down people's throats and they barely have said hello.
Mhm.
This is not the way you do business. What I find interesting is it's a slow process in that people are trying to find a single investor. You're not allowed to pool money without FCA authorization. So this whole process of building your investor network, well, but you can only have one investor in a deal. So that's where it's an opportunity to flip to crowdfunding, where you can actually build that network, but you can have a bit of money from a bunch of investors and get your deal funded, rather than trying to find that one investor that likes that one deal and has the money.
Mhm. Yeah, no, very, very much so. Okay, I'll just remind everyone, we like a bit of participation, and if you go to the Q&A, so not the chat box, if you go to the Q&A, and if you have any observations or anything that you've heard on the street or something that's relevant, by all means, fire it into the Q&A. We're happy to share that with the attendees. And again, as we go through, if you have any particular questions, again, by all means, raise those, and we will answer them the best we can. So I thought what I would do, John, is give the opportunity to explain a little bit about your property fortress. I think in recent weeks, with the name change of to LEOcrowdfunding, there's been a lot of focus on what we do, but this is very much a joint webinar between LEOcrowdfunding and Property Fortress. I know you had your Tuesday meeting. I was on for a good part of it. It seemed to go very, very well, lots of interactions. So there might be some attendees who don't really understand what Property Fortress is and the benefit of being part of your monthly network. So I thought I'd give you a chance to explain that and promote that.
Okay, thank you. And I'm sure there are some, because frankly, some of the time people say, why don't you explain it better? Why don't you market it better? Like, whatever, sorry. Cobbler's children, I think. So we care is the sort of tagline. So that's community, apps, real estate investing together, and education. As part of the community, we do a monthly event. I've been running that monthly event, probably, I can't remember because I keep forgetting the dates, but I'm guessing it's about 13, 15 years, something like that. Monthly, second Tuesday of the month. And since the April meeting, we've been doing it online, which is fine as far as I'm concerned. One of the fun things we do after the main part of the meeting, it's when it's held in a hotel, people can get together in the bar afterwards because it's in a hotel. You don't have to go outside. Well, on the online version, we've started doing a virtual bar afterwards, and people really enjoy that part. And they really get to engage better with each other, makes for deeper relationships. You could say that property investing is all about know, like, trust, which is how human beings get to form relationships and then do business together. So you have to sort of follow the process of getting to know someone, saying hello, talking to them, engaging with them. And I try to facilitate that. I try to heavily nudge people to engage, to speak up, to mention things. Funny enough, on the after meeting session the other night, one of the people who's doing a project, they have an office to residential conversion, 2 units. And there was this undertone of like, just sort of starting, first real project, that type of tone. And then they mentioned something, I don't know whether they were responding to a question. Their day job is managing 6 billion worth of residential and some commercial assets in the UK. Their job is to maximize the value of those assets for the entity. And I'm thinking, oh my God, if other people in the audience here knew that you have expertise in asset management and how to sort of focus, looking at the value and how to create new value or repurpose the value of the portfolio, that'd be like gold dust. You would have lots of people that want to talk to you. So this idea that you're almost doing what I call the British thing, and I'm just getting started, I got this little project. It's like, yeah, but the day job, it means you have all these skills. So how do we get the word out so that you can engage with people, you can bring value to the conversation? So that's at some level the purpose of Property Fortress, the community and the education, the sharing, so we can do better deals together by real estate investing together. And in particular, there's a little sort of other thread to that, is I can help people as an advisor, as a guide to their business. And that's what I've done with a few people when it comes to how to put their deals together for crowdfunding. And you'll see one of them later in this session.
Yeah. I mean, one of your skills, and obviously you've got a number of skills, but one of your skills is, I think, is reading your room, reading your audience, and kind of knowing who would get value out of talking to who. So, I mean, there are, listen, a lot of very good monthly networking events. So, you know, you could probably spend your day from start to finish looking at or being on Zoom calls and all the rest of it. But the reality is that sometimes it's making sure you get the value out of who else is there, and making sure you actually get connected with them. And you're certainly very good at sort of uh, massaging, if you like, that link between those who are there to the most relevant people who are also in the room, which I think is a valuable part of what you do.
Well, as an example, and thank you, as an example, we have a question, and I'll point it out, that they're saying that they were on the JV Challenge. Great. And they did well, by the way. They were one of the 5 selected to present to the angel, and the dragon, I guess is the phrase that was used. And they were pointing out how it was interesting to understand there's a difference between property receivership and repossession. It's the things like that. There's lots of detail. There's lots of little nuances. And sometimes the best thing to do is if you can put the question out there, because there'll be someone in the community that is pretty much a local expert. So whether they're a lawyer in this topic, or whether they have some other experiences where they're handling receiverships or they're handling repossession, so they know the food chain, or they're an investor who focuses on that. There's a lot of strategies that can be very profitable if you do them well, and doing them well is understanding the process. And if you don't understand the process, fine, we all can learn. So reach out to the community, let other people know what you want to know about. And funny enough, it's a way of building your social profile. You know, ask good questions. And a good question is any question you don't know, okay? Mm-hmm. Put it out there, let people respond, engage with the people who respond. Facebook loves that when it comes to how the algorithm works. So engagement is key.
Yeah, very much so. I see a question in there about social media, but we'll answer that just in a minute as part of this next slide. Yeah, for those who are wanting to be part of a network, certainly I can recommend. I think I've missed about maybe 3 or 4, John, in probably about 2 years of your events. So always get there when I can. I'm in London, and certainly the Zoom's a bit easier then to jump in in the current climate. So in terms of property crowdfunding, because I think as we indicated last week, as part of LEOcrowdfunding and our sort of rebrand, relaunch, business plan, are analyzing the market over the past 2 or 3 months during lockdown. In some ways, that's been a blessing that we've been able to slow down and really try and understand what's happening and see where the future lies. I think these 2 areas, John, for me, I know you certainly agree with the second one, but these are the 2 areas that I think are going to be key, not the only factors, but key factors in terms of the property crowdfunding market. And that is providing the equity part of the capital stack, and also education, getting better at educating people. And the more people you educate, the more involvement you get. So I want to spend a few minutes and just kind of discuss these two topics. So I know you often refer to the fact that senior debt is kind of easy. The equity is the more difficult part. So what do you mean by that, and why do you think that crowdfunding kind of is the best solution as the alternative finance?
So you can listen to the individuals in the room, the virtual room, or on the Facebook groups or whatever, LinkedIn groups. Everybody needs money for their deal. They have built into their model, that what I'd say baked into their model, oh, I'm going to get 65% from the bridger, or I have an opportunity to get a loan from Lloyd's, or whatever the financial institution is, and I'm working on filling in the rest of the money that I need to make the deal work. Well, that senior first position debt, that 65% that most everybody's already baked in, that I would say is the easy part when you have the other bit lined up. If you can't line up the rest of it, doesn't matter that there's an institution that will lend you the 65%. And generally, the people who are lending the 65% do not want to see other loans, or they might allow a certain percentage of debt above them or debt behind them, however you want to use the metaphor, but they want first position. So if we just keep it simple, there's debt and then there's equity, the cash. Equity, for those that don't understand, is basically your savings. It's the cash deposit. It's the stuff that you didn't borrow. It's the money from the JV partner, not in a form of a loan. There's no loan agreement, okay? It's just contributed to the deal with the expectation of some profit split on the back end. So if you can raise the equity, you can always get the debt from the institutions. And if they're a little concerned about the deal, they're a little concerned about some other things, raise a bit more equity and their concerns will go away. So my sort of quick way of saying it is debt is easy when you have enough equity. So learn how to raise the equity. That's what's stopping you.
Yeah, very much so. And I think what we are certainly doing as a platform is focusing very much on that equity part. There are obviously other aspects of property crowdfunding, and that's great if that's what platforms want to do. You know, the liquid securities, the bonds, the preference shares. I think it's fair to say, just in general, that you know, that side of the market is certainly coming under a bit of scrutiny from the FCA, as we see, as part of their consultation. So you know, mainstream equity, you know, is always needed, and it's also perhaps easier to explain to potential investors because it's pretty vanilla, is the term that people use, and that's certainly what we're focusing on. And in terms of planning uplift, again, we feel there's a very strong segment of the market for developers and fundraisers to use the crowd or a crowd of investors to effectively help them speculate on planning uplift opportunities. And again, I think this is something, John, that you know has a niche. It is higher risk than some other deals you might do in property crowdfunding. Obviously, capital is always at risk in this type of investment, but where you get gains, then they can be quite significant, and it's an interesting angle on what property crowdfunding can offer a developer.
So I would say it's lower risk. Your rewards are higher, your costs are lower, and under the national planning framework, if the local community is published as they're required to do what they want for future housing or future commercial retail, they've already published exactly what they're trying to see you as the property investor bring to them. It's not a slam dunk, but there's definitely a clear roadmap, and it says, look, we need more 3-bedroom houses. Your proposals for 3-bedroom houses. We don't want to see on-street parking. You don't have on-street parking. I mean, they lay it out in fine detail. And while there's some wiggle room in that, it's actually a lot more straightforward than people appreciate if you have expertise. Now, a lot of us don't have expertise. We're not planners, but there's certainly enough planners out there. And for some reason, most of the planners would rather stay poor by working for hourly wages or a consultancy fee. So they're willing to leave all the profit on the table for you, the property investor. And those of us that are too lazy to do this or don't have the expertise, we can invest indirectly through a crowdfunding campaign that's focused on planning. So I've been involved with a number of these, and not as the person driving the actual planning process. And the crowd will fund the cost of having proper planning consultants and all the rest of it. So they'll cover all the costs with a piece of the upside is what they want. And they don't want necessarily a massive piece of it. They want a good return, a strong return on their money, which also helps deal with the fact that maybe some of the deals won't go forward. So if you're wise as a passive investor, you put a bit of money into a number of these, and the ones that don't work so well, fine, you lose that money. You will lose the money. But at the same time, if you make money on the other deals and the returns are strong, 20, 30, 40, 50% return on your money, then you can afford to have a blended return that's still very attractive.
Mm-hmm. Yeah, I think that's the key. Potentially, it's spreading that. We'll maybe agree to differ on the risk profile. I suppose depends what you're comparing it to. To me, it's higher risk in the sense that if the planning doesn't come through, well, then your money's effectively gone. There's no value in your share within the SPV. Whereas ordinary vanilla, you know, even if it doesn't go quite as well as planned, you still have a share in an SPV that has an asset. But that's perhaps a discussion for another day.
That's the problem. If you have a piece of a development and it doesn't deliver and values fall, once the lenders are done taking their part, you have less than zero. So you have a piece of less than zero.
In the absolute worst case scenario, yes, but it's certainly the
Yeah.
reason, I would say the reason people offer, or developers or fundraisers will offer a bigger return on planning uplift than they do an ordinary equity for development is because it's slightly higher risk. But that's what we haven't time to dissect that. All the different ways we could dissect it. I suppose I'm just wearing my FCA approved hat and just making sure I'm flagging up the the risk side. On a question has come in there which is relevant to the education section with the next section. So someone's asked here about using social media to build a crowd for each deal and what's the best platform. That's a sort of a whole segment
So,
in itself. I know we've got about 5 minutes left.
Can I answer that quickly though?
Yep, I'll let you go.
And I don't have a stake in the platform, so I can probably say this. I think you're wasting your time if you use crowdfunding if you're only ever going to fund one deal. So you want to fund an initial deal to get started, but it has to be part of a longer term strategy. And you're going to be building the crowd. You're going to be putting in that infrastructure. You're going to be putting in that sort of foundation to your business by building this audience. And you're going to want to come back to the platform multiple times so that people get to know you better. They put in larger sums of money. They like what you do. You've proven that you can deliver. You've proven that when you get in the weeds that you know how to find your way out. So you can actually use social media to let everybody know you're doing stuff. And because people can get in at small increments, they can test you out. So it's like, hello, as opposed to let's talk about grandkids' university education. It's like, I don't even know who you are. What are you talking about? So you want to use social media, but the nice thing about crowdfunding, particularly LEOcrowdfunding, the old name versus the new name, you can do your case studies for your past deals. You can highlight those. You can build your audience before you even put a deal up. So you don't have to have that extra risk of, oh, what if I can't fund it? It's like, no, put up a case study where you're not asking for funding. Use social media, get the word out, build an audience. So then when you bring your deal to the platform for funding, the crowd's ready.
Yeah, yeah. And I think certainly LinkedIn, Facebook are two strong ones for that. Others do like Instagram, and then there's people who you're into Pinterest and ones like that. But I think Facebook and LinkedIn would be the
caution. Yeah, independent of the platforms, you are not allowed to say an awful lot about a deal on any of the platforms without sliding right past the FCA regulations. So with crowdfunding, you will be given permission to post. There'll be an authorized person who will sign off on all your messages. Where if you do it yourself, you're probably breaking the law. And it's very easy to slide across that line. You're not supposed to be promoting investment opportunities wildly on these social media platforms.
Yeah, absolutely. We actually have a very good module on that. And the person asked that question, we can talk offline on it. But you can access the module that John and I did as part of our week-long training on these things. So certainly happy to have a further discussion on that. Okay, down to our last couple of minutes before we wrap up. Just drawing people's attention to some coming soon projects. If you go onto our platform, you'll be able to see these. Some of these will be turning view deal over the next couple of days. And certainly a lot of very interesting projects there. We haven't had time, John, to discuss. We've ran out of time on this one, but perhaps, if not next week, the week after, we'll spend a bit of time discussing this idea of a longer term income type project for investors, as opposed to the normal crowdfunding.
Well, it's called buy-to-let or HMO. It's what everybody strives to do, but now you can get a piece of one rather than having to do the whole one yourself.
Yeah, so you get the benefit of being involved in a buy-to-let or a buy and hold type strategy without having to be the person that goes and does the sourcing and all of that. So you can see there a number of projects that are coming. So keep an eye on those. Have a look at some of the case studies that are up, and you'll certainly be.
So when it says coming soon, approximately how long are we talking?
So all of these are currently have been submitted for approval. So that sometimes can be a process that can take a couple of days to sometimes 5 or 6 days, depending on what needs tweaked and changed. So the Plough Hill View will probably be view deal possibly tomorrow or Monday. The other two I expect by next week. You'll be able to look at all of these.
So within a week, most people should be able to see this. Okay.
Yeah, absolutely. So yes, look at that. Consultancy, again, John's mentioned that. We're here. We can be spoken to if you want any more in-depth information or discussion on your particular deals or any help with anything specifically. We can do that, and obviously you can reach out to us as you can see there. So again, I've mentioned that next week it's going to be a really interesting guest on, Hitesh and Ryan, and it's going to be very interesting just delving into how they went about the project. Their project will be view deal at that point, so we'll be able to get into the weeds on it and really just pick their brain
So
as to the
just
journey.
because people don't know your lingo, so view deal means that you can actually go in, click through, see the documents, see the numbers, read about the team. You can actually use the forum for that project and post questions about that project in the forum that's specific to the project. The developers or the platform will respond back. So you can actually see a live deal. You can see it going through its funding. It's like being at a Dragon's Den event where you're watching behind the scenes, the paperwork, the people, the Q&A. If you want, if you've gone through the process to become investor ready and finished your KYC and passed the FCA little quiz, all the rest of it, you can actually pledge £100, £1,000, 10,000, whatever the number is that works for you. But that also then means you'll get a copy of the shareholder agreement. You'll see the whole process. You'll see the cooling off period. You will actually learn how fundraising works.
Mm-hmm. Yeah, very much so. And the Plough Hill View one is a very interesting project, the way they've went about it. So we can't say any more than that at this stage because it hasn't been approved yet. But once it's approved, next week it's going to be a very, I think, valuable and interesting journey to understand why they've done what they've done on this project. So that is it for today. Thank you very much, everyone, for joining us. A few more questions come in there at the end, but we're unfortunately out of time. We can deal with those one-on-one as required. So any last 10 seconds thoughts, John's wrapping up?
No, just get involved and learn.
Get involved and learn. That sounds great advice for everyone. So guys, thanks very much for joining, and I hope you found that valuable. Same time next week, and I know we'll have another good week. So above all, stay safe.